Tesla stock certainly looks like it's about to break out to the upside. In this breakout, how high could we go? Now, there's two catalysts coming really right around the corner that I think you need to consider in your short-term Tesla analysis. I think one of these catalysts could actually be a much longer-term catalyst and very substantial for Tesla's business. The second one is a little more near-term. We get this every quarter. I'm sure you guys get what I'm about to say. If you don't, we'll clarify. And just how important this could be, well, very. So we have a lot to get into in a very short amount of time. We're going to get into a bunch of different things. I hope you're ready. If you are, well, let's go ahead and get started. 5 months ago, Tony Sacconaghi says Tesla will fall short on deliveries or have to make more price cuts. That seems like the furthest thing from the truth. 5 months later. The first big catalyst, which is really a near-term one in nature, is the delivery numbers, which will be coming out in the first couple of days of January. Considering today is December 15th, this is really about 2 weeks away. So pretty near term, I would say. If we take a look at the numbers that we're seeing for China vehicle insurance registrations, you're already at about 120,000 vehicles, although we still have 3 more weeks to go. The exciting thing about this is really most of China's vehicles that have actually been produced from Giga Shanghai have been exported. So it's hard to say exactly where the numbers are going to come in. I could probably do a rough estimate, but it's not going to be accurate. It's probably going to be pretty close to the 475,000 vehicles that Tesla needs to at least hit its guidance of 1.8 million vehicles for the year. You could come in about 500,000 vehicles as well. Somewhere in that range is what I'm expecting. Roland Percher put out a great chart here. It looks like you have to be subscribed to see the actual numbers, but just based on what we know for China, each of these lines here should be about 200,000 vehicles. So this looks like the US is going to see roughly about 630,000 vehicles for this year delivered. China right at about 600,000 vehicles. Europe probably going to be at about 390,000 vehicles or so, and then the rest of the world's going to be about 180,000 vehicles or so. And if you take a look at this dark blue here, that's all you need for new data to actually beat the estimates. A little bit more for the US. We'll see how those numbers come out. We don't have a lot of data on US numbers, so it's going to be a little bit trickier this time around, especially because this quarter is what determines if Tesla hits its full year deliveries. I think Tesla's going to. And that's going to be just great news on an algorithm kind of basis. The algos are going to love 1.8 million or higher, 475,000 deliveries for Q4, and that could send Tesla stock higher. This is a chart of some of your daily reporting countries in Europe. Yeah, a lot of European countries report their Tesla vehicle registration numbers every single day. And as you can see here, Germany is in the lead at about 60,000 so far for 2023. France is right behind them at about 55 or so thousand. And the UK is at about 45,000. These numbers look very strong, especially for France, with some very nice year-over-year growth. And Tesla's market share still way low in all of these countries. So long runways of growth I can see there, but even the rest of Europe is a lot more impressive. I mean, the red lines basically for all of these other countries are larger than 2021 and 2022, which is the green and the yellow lines. Besides Switzerland, that's pretty close here, but all of these other countries are just dominating in 2023 as far as Tesla deliveries. So this is furthermore evidence that Tesla is probably going to hit its 475,000 number. That's a big number. If you missed that number, oh boy, watch out below for Tesla stock, because Tesla is going to fall. Demand concerns will be back. then ultimately margin concerns. But that, my friends, is something I don't think we have to worry about too much. Considering we get a lot of data on vehicle registrations, again, not from the US, but from China, from Europe. The second and third most important markets for Tesla, unfortunately, we don't for the US. It's becoming pretty apparent Tesla's going to be right at or slightly above the estimate. So I think that's going to be a positive catalyst, but I don't think that's going to be this huge catalyst. Not like this second one. Now, this second catalyst could be a game changer for Tesla stock. This could cause Tesla stock to explode higher for a couple different reasons. Fundamentally speaking, this will be huge, but it's something that is really not priced into Tesla stock at all. It's not priced in for margins. It's not priced in for just pure profitability next year. This catalyst I'm speaking of is FSD heading into China. There's been a lot of rumors lately that FSD is going to enter the Chinese market either in the month of December, this month that we're in, or in January. And if that happens, I think Tesla's probably going to be up 10+% in a single day. Theoretically, if that were to happen on Monday, hypothetically speaking, that could put Tesla stock back to about $280 per share. If we rally a bit before then, which I think more conservatively, this probably comes out some point in January, that's when you could get that acceleration above $300 per share. And even some of your shorts, some of your bears are going to be in a really bad spot. Even some of your most bearish bears on Tesla, including Ronald from Guggenheim, just yesterday raised his price target from $125 per share to $132 per share. The analyst says, quote, "We are updating numbers for Tesla to reflect the latest delivery trends, pricing, and other items. Q4 2023, we see deliveries tracking in line with 1.8 million unit guidance, led by strong China trends. A strong November in Europe, sustainable, ? And continued softness in the US." They go on to say that margins should improve a little bit, that full year 2024 guidance, we see an upper bound on full year 2024 volumes in the 2.2 to 2.3 million range capacity, but believe a more prudent guide would center around 2 to 2.1 million units, which likely disappoints growth investors and offers a sobering reality that Tesla's current model lineup is demand constrained. Even at 2.1 million units, that would be 17% year-over-year growth. Now, they also go on to say that margins should be boosted a little bit. The last kind of paragraph here, they say, we expect the bull thesis beyond longer-term items to shift to Tesla interest rate sensitivity, long-duration equity plus financing resilient product, but lower rates will likely only marginally support demand. In our view, remain sell-rated, but raise our price target to $132 from $125, primarily on a lower discount rate. So actually what they say here is pretty bullish. Which really just makes you wonder why they think Tesla would even remotely hit $132 per share. Things would have to get really, really bad out there for that to happen. So point is, I think even some of your bears, your most bearish bears out there are starting to feel the pressure of Tesla stock, especially as we are now above $250 again. Specific. FSD entering the Chinese market would be a total game changer for Tesla stock, both fundamentally and for the future of Tesla in the near term and the longer term. If Tesla started to offer FSD, it goes for around $8,000 or so in China. About 90% of that is going to be net profits. If Tesla has already done about 554,000 deliveries in China this year, next year they're probably going to do, let's call it 650,000 deliveries, could be closer to 700,000 deliveries. Who knows the actual number? I think 650,000 deliveries is actually pretty conservative. Times this by 0.0 what do we say? Maybe a 15% take rate in China. I think the take rate might be a little bit higher in China because they're more tech adventurous, tech savvy. They embrace technology a lot more. That could put you at about 97,500 potential sales of FSD for next year. Times this by let's go ahead and consider 90% margins on $8,000. It's too early to math. Okay, 90% margins would be $7,200. Times this by that number that we just said, 97,500 potential units that could be sold of FSD next year. That could be about $702 million basically to the bottom line. That would be taking out 10%. That's mainly equipment, right? That's where you get 90% margins on FSD, roughly. That's kind of what we expect in the Tesla community. Tesla analysts, about 90% margins seem appropriate, as it's basically just software that is being sold. So almost $1 billion in bottom line profits. That could be a very big deal. I mean, divide this by 3.3 billion shares outstanding, you could boost the EPS by about 21 cents or so. This is not including all the other aspects of Tesla's business. This would just be an added benefit, right? And if you just want to figure out how much this could actually benefit Tesla stock, it's pretty simple to do this. Let's say 21 cents times a 65 multiple. That could boost Tesla stock about $14, which doesn't sound too crazy, but when you start to add everything else up, well, it could be a big deal. Now, we don't know what the actual numbers are going to be, right? They could be higher, they could be lower. You never really know. The single biggest driver of a stock's performance going ahead into the future over time is earnings estimates going higher. And that's exactly what we have seen recently, which I don't even think is fully reflected into Tesla stock. Currently, the 2024 full year EPS estimates $5.65 per share. If Tesla stock is trading at about a 75 times multiple, if you guys did not watch the last video, definitely check that out. And let's say Wall Street is correct here at $5.65. That means Tesla stock could be at all-time highs coming next year. And I think this catalyst is substantially important. It's almost $1 billion of additional profits to the bottom line. The take rate on FSD could be higher as well. 15% might be a little conservative. Maybe it's closer to 20% or even 25%. There's a lot that we don't know in regards to this catalyst that we expect to come this month or next month. There's a lot. The take rate, the price in which FSD will actually sell for, how many vehicles Tesla's going to sell in China next year. There's a lot that we don't know about. Okay, let's be honest. But we do know one thing. This will get Tesla stock moving. And this will move the needle for Tesla stock. That we do know. Now, this all comes at a very interesting moment in time where Tesla stock is finally starting to break this trend that you have followed ever since Q2 earnings, when Tesla was at about $300 per share and fell big time. Well, look at this line. It tells the story here. You have gotten rejected every time you have hit this. Even back on November 29th, you got rejected here as well. And now you solidly, strongly broke above this line. You are now in a very strong uptrend at this point. Even what you seen yesterday on Friday, Tesla stock was up about 1%. Friday was not exactly a very strong day for the markets. The indexes really did not perform all too well, especially your interest rate sensitive names. Now, why did Tesla? I think you can make the argument, basically what I've been saying this whole time. Small and mid cap stocks are great, right? They provide you an alpha where you can outperform the markets. Beta is perform the markets, alpha is outperform the markets. When hedge funds and institutions are trying to keep clients and gain new ones, they need to outperform the markets. You don't get any brownie points for underperforming the markets or performing just in line with what the S&P does. What hedge funds and institutions do is they buy stocks according to the weighting of the S&P, whether that is putting 12% of their portfolio into Apple or putting, a similar amount into names that have a weighting in the S&P, right? It's pretty simple, sounds a little bit more confusing than it actually is. They try to follow the markets by keeping their portfolios weighted to the markets. And then they go out and they buy some alpha, which is supposed to give them the exponential return, which can turn, your portfolio following the S&P. Let's say the S&P does 20% in a year. Your alpha, if that does really well, that could be, a small mid-cap stock, right? If those do well, then you could outperform the markets. And that's ultimately the goal, what you want to do for your clients. Now, Tesla offers you a beta because it does have a weighting in the S&P, but it also offers you the alpha as well with potentially outsized returns. Now, Tesla's still down 40% from all-time highs. If we just maintain our valuation into the end of 2024, if Wall Street is correct with their assumptions for Tesla's EPS, Tesla stock's going to all-time highs. So I think there's a lot of people that are saying, hey, should we buy small and mid-cap stocks to get our alpha to get away from less interest rate sensitive names like the Magnificent Seven? Or do we buy Tesla? And we still get a degree of safety. We still get a quality business with very little debt that could benefit from rates falling. I think Tesla's the clear and obvious winner here. Now, you've seen this 3 days ago as well. On December 13th, Tesla stock did fall. This was during the Fed meeting as well, before the Fed meeting. Tesla stock fell to about $228 in this demand zone. This is a very strong demand zone in here above the 200-day moving average. This is pretty close to a hammer candlestick. Shows the bulls went in full control at this moment. And that's basically what happened as well today. You closed near the high. That's a great sign heading into the next couple of weeks. So these are two catalysts that we can forecast to say with a reasonable degree of certainty that are going to be bullish for Tesla stock. And I think when you boil this down to the simplicity of where we are at in the markets, you don't have to get too complicated with this. You have a record amount of cash out there in the system, or close to a record, and a record low allocation of capital into stocks. Where else are you going to put that money? Are you going to put that in Apple or Microsoft trading at all-time highs when they don't benefit from rates going lower? No. You're going to put that in interest rate sensitive names. It's literally, I've been investing in the markets 7-8 years now, trading, investing. It's been something I have taught myself, but really come to love just learning the process and being involved in markets every single day. I eat, sleep, and breathe the markets. If you're a manager to a fund investing clients' money, this should be easy to you. It's all about interest rate sensitive names and quality. There's no better stock than Tesla. So I think that is another reason why Tesla, again, outperformed on Friday. And this is starting a new trend. There's a lot of bears on Tesla. Actually, let me just show you this. There's so many bears on Tesla, it's ridiculous. If you just type in Tesla stock on Tesla stock CNBC, you're going to come into all of these different articles. Tesla is egregiously overvalued, says Roth Capital's Craig Irwin. Tesla will fall short in deliveries or have to make more price cuts. Ultimately, Tesla needs to improve its margins. Concord says Tesla's undervalued. Bunch of some of these don't have anything to do with Tesla. Tesla's Q3 conference call was a disaster. Investors should sell Tesla stock if they don't like Musk's comments. You get the idea, right? There's a lot of people that are bearish on Tesla. And I think as we continue on, it's a pretty bad setup that you have. Bernstein's Tony Sacconaghi, why he's underweight Tesla. 2024 and 2025 will be pretty tough years. 2023 was a tough year. 2023 was the tough year. 2024 and 2025, things are going to get easier for Tesla. I mean, it just really makes you wonder how they still have jobs at this point. Take a look at the option activity on Friday as well in Tesla. You had about 1,200 hedge fund and institutional trades worth $1.56 billion with a positive order value of 64%. That's a pretty dang strong number. If you take a look at the volume as well, you did have 60.59% volume to the call side and 39.41% volume to the put side. Not all too often do you see the calls really dominating over the puts like we seen on Friday. I just want to say this as clearly as possible. I've never been so confident that Tesla is going higher. In the short term, in the midterm, and in the long term. Sure, could weeks be red and could Tesla go down from time to time or day by day? Sure, of course. But around these two catalysts, really FSD entering China as a very specific one as well, I think Tesla's going higher. I think the technicals are telling you Tesla's going higher. So me personally, I've been waiting to make some trades on Tesla to the upside in options until I got this confirmation that I have been waiting for, and we got that confirmation on Thursday and on Friday. In my personal opinion, we have a pretty clear path to about $300 per share, if not higher. Let me know what you guys think about this information down below in the comment section. What are the biggest catalysts that you are waiting on for Tesla? Do you think these two catalysts will be big ones? I also think, and I want to talk about this in a separate video down the line, the $25,000 vehicle for Tesla, that could be announced late 2024 at some point, second half of 2024, probably at the bare minimum. We don't want to cannibalize the Highland before it even comes to the US, but that could be a catalyst that could send Tesla stock to $500, $600, $700, $800. It's really hard to tell, but that will be another big catalyst that we know of. And these are only catalysts we know of, let alone the other catalysts we don't know of. Licensing of FSD, right? That's 2 quarters now that Elon has been in talks with a major OEM to license that technology. So I've never seen the situation so clear with Tesla. I think Tesla stock's going higher. Obviously, I'm not a financial advisor. I'm not a financial planner. I wish I could bookmark this video. I might on the channel make this the headline of the channel, so everyone can see just at, what we were talking about here. And I think Tesla a year from now is going to be at all-time highs, over all-time highs, in the 400s, potentially $500, $600 per share. But in the near term, could Tesla go above 300? Absolutely. So that is going to do it for this video. Hit that like button and subscribe to the channel if you guys have not done so already. My name is Michael Tyler. Enjoy the rest of your day and your weekends, and I will see you in the next one.